Hi, everyone. This is Jason Bierko of Wall Street for Main Street. Welcome back to another Wall Street for Main Street podcast interview. Today's special guest is a returning guest. She's here to talk about her new book. She's a former investment banker. She did billions of dollars at deals. She's also a best-selling author. She has 3 best-selling books. My favorite entrepreneurship book. I highly recommend going out and buying it. It is the most balanced entrepreneurship book out there. It's not all unicorns and rainbows. Trust me, there's a lot of burnout, rejection. It's very, very difficult being an entrepreneur. I know now, especially with the new self-employment tax that they have for one-person limited liability companies. Her entrepreneurship book is The Entrepreneur Equation. Her second book, which came out in 2020, was The War on Small Business. And her newest book, You Will Own Nothing. So I want to ask her about the title. Carol Roth, thank you for joining me.
Yeah, so great to be back with you, Jason.
Yeah, I wanted to do the introduction. I wanted to promote all your books because honestly, that first entrepreneurship book, there's a lot of people out there ask me all the time about entrepreneurship book, and your book is the first book I always recommend.
I appreciate that. Each book has sort of, stood alone in terms of its merits, but hopefully the thing that stood out between all of them is the way that I kind of break down difficult concepts, make them extremely easy to understand, and then let that knowledge empower people to make better decisions for themselves.
And for our listeners out there, we had you on, I think, 6 months ago to talk about your second book, The War on Small Business. So if our listeners want to go into the archives, they can go and listen to that interview. This specific interview, I want to talk about your new book, which is coming out in a month. My listeners can go to Amazon or your website and go and pre-order the book. I believe it's going to be on Audible audiobook too. And that is You Will Own Nothing. Now, where did you come up with this title, Carol?
Well, so to be fair, I didn't really come up with the concept of you will own nothing. The inspiration, I don't know if that's even the best word for it, but it came from the World Economic Forum and their 8 predictions for 2030, which their number one prediction was you'll own nothing and you'll be happy. And that sort of set the internet on fire. And as things happen when you're on social media and you run into people kind of outraging over whatever's going on that day, I wasn't sure that that was actually, what had been said, because, how is it that you have this organization that is littered with the elite business people and political leaders and academic thinkers? Like, how is it that they're predicting the end of private property, by year 2030? So I did some research, and obviously it didn't take much research to stumble into their video and to find out that was exactly what they had said, and actually had been saying in various formats for several years, different articles that all kind of regurgitated the same thesis and repackaged it. And, as somebody who has advocated and advised on wealth creation for individuals and businesses for over a quarter century, that was just really staggering to me, because obviously I know, and I know that you know as well, Jason, that the way people create wealth is through ownership. Specifically, you own assets that have the opportunity to at least maintain their value, but hopefully appreciate in value. And that's what creates wealth. So the idea that you have these people who are running around and saying, oh, we're predicting that you won't have ownership. And then on top of it, they're trying to sell it to you. They're trying to get your buy-in. Oh, you'll be happy. Was staggering, because, as a sort of student of history, I know that throughout history, people who haven't had ownership have not been happy. They've been unfree, miserable, and in many cases dead.
Well, also throughout history, and this was prior to the Industrial Revolution, which really allowed even the possibility of upward mobility, because for many different countries prior to the Industrial Revolution, there was mostly serfdom, there was mostly feudalism, there were even forms of slavery. So unfortunately, it seems like a lot of that you will own nothing. You don't have any chance of upward mobility from what it sounds like.
Yeah, it's a really good point. One of the things I talk about in the book is the late writer Tom Bethel, because he describes it, excuse me, so well. And he talks about how the concept of protecting property rights, as well as you mentioned, the Industrial Revolution and kind of, some of the early technology, allowed for the horizontal transmission of wealth. That previously transmission of wealth was very vertical, right? You had, like you said, the people in the top of the kingdom, and they passed it down to their heirs, and those were the people who ended up with all the wealth. But as we had the protection of property rights, and as we had these technological developments, then more people were able to participate in trade with each other and to spread out that ability for people to create wealth. So the idea that we would now move in a different direction and somehow sell that as an attractive proposition is pretty staggering, and sort of creates the foundation of what I thought is the perfect title for the book, because there are so many different forces that are looking at the shifts that we have going on in the global financial order. Also something that's not as conspiratorial as it might sound. And, basically wealthy and well-connected see that global financial stakes are shifting. And if you're somebody who's intelligent and sees this, are you going to just stand back and hope it plays out in your favor? Or are you going to proactively do everything you can to either shift the stakes or, somehow make sure that you and your cronies come out on top? And I think that it's very much that's what's happening.
And it's been happening for decades, Carol. So we're recording this interview on Friday, June 9th, 2023. Federal Reserve policy and the other central banks for the last couple decades, and we were discussing this before we started recording, I think it really started with the Alan Greenspan Fed. As interest rates were coming down, there was a bond bull market. U.S. federal government spending went out of control with military spending and social program spending entitlements. And while the Fed was helping manipulate interest rates lower, that allowed the affluent, the large corporations, the rich people, the hedge fund managers, the Wall Street banks to go in there and buy asset prices for cheaper. So stocks, bonds, real estate. And I think the overall intentional policy, the Fed labeled it the wealth effect. They were writing papers about this for 20 years, the wealth effect. It was really the Cantillon effect to intentionally inflate stocks, bonds, and home prices. But what that did, Carol, and we've seen this, is that the wages really since the 1970s in inflation adjusted terms with the CPI, the wages have not really grown. And now we have situations, and I'm just hearing these crazy stories where even though interest rates are high, you'd think the home prices would have crashed. That a married couple in Dallas, Texas, Dallas, Fort Worth area earning $100,000 or slightly above that can't go and buy a house, can't afford it.
No, it's really a scary proposition. And I do think it's one of many set of forces that we're fighting against in this kind of fight back against the global elite and you will own nothing. And certainly I agree with you that the Fed and the government together have been the biggest enablers of wealth transfers from Main Street to Wall Street, and the biggest drivers of non-merit-based inequality, anywhere in any time in history across the world. And I think I actually talk about in the book the Greenspan put and the idea that he'd be willing to support the market at all costs. He kind of took those baby steps in, and then his protege Ben Bernanke sort of bust through with abandon, and really I'd say certainly you can trace it, the beginning to big shifts to back then, but it's really shifted over the last 15 or so years with the bastardization of monetary and fiscal policy at levels that we hadn't been seen or haven't been seen before. And you're absolutely right. What it has done is it has created inflation in assets. And it was always very funny to me as a pundit on TV with networks where you would hear the Fed say, oh, we really can't get any inflation going. And it's like, what are you talking about? You're inflating everything, just not the spending side as much, but you're inflating everything to the benefit of everybody on Wall Street. And so we saw the stock market inflate, and we saw the home prices inflate, and we saw, anything that was, that kind of an asset inflate. And of course, the people who are on the inside and on the well-connected side loved it and benefited from it. And so coming out of the Great Recession financial crisis, if you want to just take homes, for example, The home prices at that point became very depressed, boom and bust cycles that great for the wealthy because they can participate on both sides. They do well when there's the boom, and they use their capital to scoop up the discounts when there's a bust. And so after the Great Recession financial crisis, you had all the foreclosures and the short sales. The Wall Street got bailed out. Main Street Americans, millions of them lost their homes. And because there was all of this asset inflation going on, as well as cheap capital from Fed policy, Wall Street decided for the first time in history that they were going to compete with individuals for single family homes. Prior to 2010, there was no meaningful institutional capital. I have this source from multiple sources, no meaningful institutional capital competing in the single family homes market. Now, about 1 in every 5 houses that are sold are being sold to a corporate investor. And that is just staggering, because if you think about what the American dream is, the physical, picture that you have in your mind is the house, is the housing ownership. And there's a reason for it, because across most households, the house tends to be the largest asset. So now you have the Fed coming in and making that unattainable because corporations are competing, as well as on the fiscal policy side, local level government policy, local level not being able to build as easily, having almost $100,000 in cost for the average price of a new home going in per regulations, and so on and so forth. Not to mention just ruining the purchasing power of the dollar for individuals and saddling young people with debts. So it's a really tough situation. And you've seen some of these corporate players say their intention is to rent people the American dream. And that really aligns with that scary thought of owning nothing.
And this aligns perfectly, you will own nothing, with my Stagflate tax life thesis, because I've just been paying attention going back. I mean, if people go and look at the Yardeni Global Macro Research, they put out a chart with the correlation with central bank balance sheet, not just the Fed's balance sheet, but the European Central Bank. So like the top 6 or 7 central banks and their balance sheet increases since 2008. And there was a perfect correlation, basically, with all those central banks growing their balance sheet up to tens of trillions of dollars with the S&P 500 here in the United States. Yeah. So a lot of that extra capital, not just from the Federal Reserve Bank, but these other countries and central banks, it ended up here in the United States buying our assets. I mean, there was just tons of anecdotal stories too, Carol, of Chinese investors and European investors coming in and buying up home prices too, competing against the average American family that's trying to buy their first starter home.
Absolutely. I mean, this is not something the U.S. may be leading the way, but as you mentioned, the allies that we have, Bank of Japan and the European Central Bank are all doing the same kinds of things as well. And, it's just distorting the capital situation on a global basis. At the same time, if you go back to what the Fed is supposed to be doing, they're supposed to be managing the U.S. dollar as the world's reserve currency, for the benefit of the global and domestic economy. Now, as you probably well know, that it's called the Triffin dilemma. That those two things are often at odds with each other, and central banks have to decide whether they're going to favor domestic policy or global policy. What I think is so amazing is that the Fed, as our central bank, has managed to do neither. They've managed to not keep the currency stable, as a reserve currency globally, and they've completely, screwed over the U.S. population as well, because, as you've noted, so many of the other countries are in similar situation, and there isn't a great alternative. They've still been able to get away with it, and so that's when you hear people talk about things like the strength of the dollar. The strength of the dollar, may be the case against certain other currencies, but it's not strong when you go and you try and buy groceries here in the U.S. So it really is a very odd, global financial backdrop. and I think is indicative of the kinds of shifts and changes we see, as these new global financial orders come about. The crazy things start to happen. Debt and power start becoming coming at odds with each other, and these are the kind of catalysts that shift the thoughts about the global financial order. And certainly we're seeing China, the Middle East, North Africa, a lot of places de-dollarize because they're worried, they're concerned about what's happening, both with the US weaponizing the dollar and the mismanagement. And it creates national and economic security issues for those countries as well, which certainly just doesn't help the potential to keep the pole position in the global financial economy.
I also think this has to do with taxes and the total amount of debt, because the U.S. federal government, whether that's the U.S. Treasury, the Federal Reserve Bank, which funds the U.S. federal government spending, because there's not enough demand for U.S. Treasuries right now, they want a managed decline of the U.S. dollar. So we hear people say that they want a strong dollar. The Fed doesn't want the dollar to fall. They don't want it too strong or too weak. They want like a kind of a Goldilocks dollar where it's not right. Too strong, it's not too weak. And most people don't notice that the dollar is declining in purchasing power over longer periods of time.
Yeah, and I would imagine that that's pretty central to your thesis, right? Is that this kind of Goldilocks place gives them a little bit more wiggle room, but it really does put the U.S. In a pickle. And I think that one of the challenges with the central bank is that they just think that they're so smart, and that basic principles of math are not going to apply to them. Or there's a camp of people that thinks that it's all intentional, and it's a way and a route to bring upon a digital dollar and to try to confuse everybody. And those things aren't necessarily mutually exclusive either, right? But
I view the Fed, sorry to interrupt you, I view the Fed mostly as kind of like a great enabler. So they're kind of like the bartender that keeps handing the drunks in Congress, yes, both political parties, more drinks, even though they've already vomited and they're about to fall on the floor.
Yeah, no, it's true. And, I had put out a tweet the other day at the time that we're recording this, is that, when you look at the other countries, obviously you have China that has been getting rid of their treasuries. You have, other central banks that are our allies that have obviously been holding on to treasuries as long as possible, but they've got massive energy situations. And so, eventually they have to sell treasuries for dollars to be able to pay for the energy that they, can't get otherwise because of their own stupid decisions. And if you just look at the trajectory that we're on, which the U.S. Treasury itself has reported is absolutely not sustainable, the CBO has said is not sustainable. I mean, nobody thinks that this is a realistic scenario. If you look at the level of debt in the long term, nobody even has the capacity to fund that. Even if they wanted to, even if there was an interest in it. And obviously right now with interest rates, for things like T-bills being really high, yes, there's an interest that's temporary, but not the levels that we're talking about. And that isn't sustainable either. And I've seen several people, very smart people, argue, who know a little bit more about the plumbing of funding the Treasury General account, as well as the deficit, that say even right now there's nobody to buy the debt. So that means the only entity available to buy the level of debt we're talking about is the Federal Reserve, and we've seen how well that worked out for us over the last couple of years in terms of that epic decline in purchasing power that we hadn't seen since 40 plus years ago.
I think one of the reasons why people it's going to be very difficult for them to own anything are the dangers of even a low inflation rate over longer periods of time. So the average person doesn't think about this, that if there's been 2%, 3%, 3, 4, 5, 6% inflation for the last 20 years, say 3 or 4% inflation for the last 20, 25 years, over longer periods of time, that'll cut their purchasing power in half. So that'll absolutely destroy their standard of living. And I could definitely make the argument that there's been at least a way above a 3% inflation rate for at least the last 20 something years.
Yeah, I think that's right. I think anybody who is being honest and is in the know understands that the way that inflation is calculated at the government level isn't telling the truth. And then, I go back to my argument that, even when it doesn't show up in the purchasing power, it shows up in the inflation of assets. So, if your purchasing power isn't as affected as much, but you still can't buy the kinds of things, or you have to take on a lot more risk to buy the things that are going to appreciate in value, that's not a good scenario. And that's really, this driver of this, this inequality, this wealth transfer from Main Street to Wall Street. And I believe that, that over time that just continues. You get the barbelling of the population where you have this, group of people who basically owns everything. There's absolutely no middle and working class that gets, hollowed out. And then you have the poor people. And you just need to look over, to Venezuela to see, how that sort of played out. They used to be the fourth wealthiest country in the entire world. As of a couple of years ago, there was a study done, I think it was by Credit Suisse, and it said that the median net worth of somebody in Venezuela was zero, like not like literally they owned nothing. They had no net worth. So, you can see that devolve in a relatively short period of time. And just based on what has transpired here over the last 15 years and really has just continued to accelerate, people really do need to pay attention if we want to sort of delay this shift in the financial world order, and they want to protect sort of their individual place and make sure that they do own things. Because again, if you don't own things, they're going to basically own you. You're going to be an indentured service. They're going to rent your life back to you as a subscription or a service, and you're going to be very unfree, not have agency, and not be happy.
So do you expect taxes to continue to increase across the board on asset prices, income, I don't know, pretty much everything, maybe even new types of taxes like some type of value-added tax or carbon tax, things like that?
So definitely, look out for 2025. The Trump Tax Cuts and Jobs Act expires. It has a built-in expiration there that I don't think is going to end up being renewed because of this issue. One of the big areas that I identify, in my research that was, pretty staggering to me was that within the next 23 or so years, there's almost 85 trillion in wealth that is set to turn over voluntarily through inheritances. And, that's, not just the wealthy's money, that is, the middle class of America's money that is going to be passed down from older generations who pass on to their kids. And that is, if you are the US government, a really nice sum of money, right? Because not only do we have $32 trillion and growing in national debt, but they also have, over $100 trillion in liabilities and promises that they've made on the social scale. So what we're already seeing is we're seeing calls for wealth and inheritance taxes. But of course, Jason, it's just for the super wealthy. It's only going to be for the billionaires and the really, really creme de la creme. And yes, go ahead.
So if you actually go back through the history of taxation, in I think 1913 with the permanent income tax, which was also, I believe, the year the Federal Reserve Act was created, that's how actually the first permanent income tax was sold too. That's only the wealthy. They're only paying only the ultra wealthy are paying 5%.
Bingo. And that's exactly the issue here. Is that, as we know, the ultra wealthy are the people who are on the inside. They're also the people with the lawyers and the accountants and the helping write the loopholes. And they're never the ones that ends up paying for any of this. But what it will do is it will get people, it's the carrot that give people the ability and the basically the proactive words to say, I don't like this, and so I want them to suffer, and so I'm going to put aside the concept of property rights. I'm going to put aside the moral issue here because we're sticking it to those ultra wealthy and they shouldn't have that much money. And once you give up that principle, they are going after that $85 trillion because, again, the couple of trillion that probably not even $1 trillion, but whatever it is, maybe it's a couple trillion that the wealthiest billionaires have pales in comparison. That's a tiny fraction of this overall money that's sent to turnover. So as soon as the masses go, yep, go after them, that's done. And it's going to be the absolute biggest wealth heist in history.
And I think the people who are voting for more taxes are going to end up getting screwed over the most because they're looking at additional taxes that are going to be hidden or added on later. I mean, most of the politicians, instead of, if you speak to have honest conversations with local politicians at the county or state or government level, they don't really want to do enormous slashes in spending. They actually want to either increase existing taxes or layer on new taxes. And this is the messed up system we have now, where the Federal Reserve Bank has intentionally inflated asset prices. And then a lot of these state and local governments just see it as, oh, we'll just increase property taxes every couple of years. No big deal. That's kind of the ridiculous attitude that they've had for so long.
Yeah, well, there's two things that I want to say, kind of to underscore that. One is that, the biggest hidden tax that we've had over the last couple of years has been inflation, right? That's eaten into people's wealth more than anything. And so, that is a hidden tax or a hidden cost that gets layered in based on this horrible policy that we enable, thinking that, it's going to turn into the right thing. The other issue is just, the linear thinking that's just wrong from so many people. When I hear so many folks on social media who like to say, oh, the Tax Cut and Jobs Act was this giveaway to the 1%, and that caused bigger deficits. Now, a couple of things that are wrong with it. And by the way, I have a lot of problems with the Tax Cut and Jobs Act, and I don't think that it was fairly done across the board. I think that, small businesses really got screwed on it. But the reality is that almost everybody saw their taxes cut. So that's the first piece. The second thing is, up until we had the COVID insanity, the Tax Cut and Job Act actually increased tax revenue. It's because, that's how it works, that if you don't have the money going to the government, it's actually used in a more productive way. And it actually expanded tax revenue. The reason why we had the deficit is because they also increased spending even more. And so then we had more of a deficit. But the idea that you're going to raise taxes and that even at the core is going to increase revenue may be a false statement to begin with. And they end up actually widening the deficit, because if you look back, through these kind of different periods, that's what happens often. So, maybe because of inflation, it gets hidden a little bit, but it's certainly not going to create a lot of expansionary prosperity.
Or if the politician finds a PhD economist that produces a study saying that if we increase taxes, right, that will increase tax receipts, or citing one short example of history. What they don't understand is the average person then, and we've seen this in a lot of different countries, whether it's the European Union with the value-added tax and others, it produces a black market or a cash-based economy where people are avoiding the banks, people are avoiding the value-added tax. So that's what it is. So do you think then this is like a cat and mouse game, and this is why the governments are talking about cashless society and central bank digital currencies?
Yeah, I mean, so going back to the idea of being on an unsustainable fiscal path, they do need to do something in order, to keep this game running in the way that they have rigged it. Certainly, there would be a great outcome would be for them to just grow a pair of balls and to have some austerity. And if we just rolled back spending to what it was in 2019, or better yet, 2018, we would have surpluses and we could actually pay down the debt and we could, start to right the ship. But we know that nobody's going to do that. So I do think that is one of several factors that underlie this push for central bank digital currencies. The other being the emergence of cryptocurrency, which, funny enough, Bitcoin and the like came out of the desire to push back against this fiat money and this mismanagement from central banks and the associated governments. And whether or not you believe that, I'm not here to sit and argue that, but just say that was sort of the thesis. And the central banks are going, wow, that could really threaten our power and our scheme here. We need to stop that. So we're going to confuse the public at large and make them think that what we're doing is quote unquote safe cryptocurrency, which is hilarious because obviously we know that they've been the biggest perpetrator of the destruction of value here. And it's not cryptocurrency because it's not decentralized. It's going to be completely centralized. And so I see a scenario that could unfold in a few different ways, Jason. And my guess is you've probably thought of other scenarios, but they basically bribe people to get into a digital dollar. And I see it coming around in potentially several different ways. One is that they promise universal basic income. Hey, we're going to give you UBI, another government promise. If you sign up it to be paid in digital currency, that could be one way. Two, because of your stagflation thesis that we never get inflation under control. And they say, hey, if you want us to be able to control inflation, we can do that with this great new digital currency. And then the way that they do that is if they want to stop spending, they literally cut off everybody's access to money and you just literally can't spend. And so that, controls inflation. And let me just give you the third and then I'll let you respond. The third is the same thing that happened during stimulus, right? Is that they promised people something and people didn't understand what the implication was. So Jason, I'm going to give you 100 digital dollars if you turn in your $1 US and you go, oh my God, I'm going to be a millionaire, not understanding the implications of debasement of currency and what that would do to the actual value of each of those digital dollars. And then you get a bunch of people in that way. So those are some of my thoughts.
Are you aware that MMT, so modern monetary theory, which is not really modern, yes, that one of the ways that they propose to reduce inflation or eliminate it is to actually increase taxes? So they said if there's a stagflation, really bad inflation going out of control, so either high stagflation or worse, that the way to stop that is to raise taxes even further. So they want to tax the stealth inflation tax that they were already implementing.
Yes, I call MMT magic money tree. I did not make that up. I've heard that somewhere and I just sort of adopted it. But yeah, that is one of their wonderful ideas. And it's pretty amazing that all of the people who were huge proponents of this, when we lived through it and saw that it didn't work, just as all of us who had 3 brain cells predicted and said that it wouldn't, and we saw the massive inflation that it caused, that all those people are laying pretty low, and I haven't heard very many mea culpas.
Yeah, I mean, with my Stagflate tax life thesis, it doesn't even have to be 15, 18% inflation rate. I mean, we had lower than that since in the early 2000s and then post 2008. So even if the inflation rate was 3% to 6% over longer periods of time, I consider that lower levels of stagflation. It just adds up. So it doesn't add up over a couple of years, but then over longer periods of time, 10, 15, 20, 25 years, then it really starts getting very, very burdensome.
Well, I mean, it's the time value of money in the opposite direction, right? So instead of investing your money and seeing the benefit it grow from a compounding standpoint, you have that compounding happening in terms of your purchasing power on a negative basis. And so it's really the same thing happening, but to your detriment instead of to your benefits.
So social credit score, I know we've discussed this privately. Do you think that the goal then for these Davos elites, economic and political elites out of Davos, is to copy what the Chinese government, the Chinese Communist Party has done and implement maybe central bank digital currencies with cashless society so they can track and tax transactions, and then add that on top of that, a social credit score, make it maybe full Orwellian, full totalitarian government?
So the interesting piece about social credit is that there's a formalized social credit system and there's sort of a non-formalized social credit system. And I would argue that here in the US, we have a non-formalized social credit system. We've already seen people being punished for wrongthink on social. We saw the government collude with social media around various COVID narratives. We saw them take people's businesses and shut them down. We saw people not be let into society and go to restaurants, if they hadn't taken vaccine. We saw people's jobs taken away because they didn't comply. I mean, that's social credit. even just the cancel culture elements, the going after the Joe Rogans and the Dave Chappelles and going after their livelihoods, that's social credit. It just, hasn't been codified in the same way that it has in China. And by the way, China's is still emerging. It's I talk about in You Will Own Nothing, kind of the differentiation that it goes through from jurisdiction to jurisdiction. and the kinds of things that get you benefits and the kind of things that get you detractions, and those all change based on the whims of the jurisdiction, to the benefit of the people in charge. And so I do think that there is a logical tie that the more technology that exists, the more formal that we can have this collection of data, and the more tied together everything can be. And certainly CBDC could be a way to enforce it, and vice versa. And those things would obviously be really scary developments. And I know people are probably saying, oh, but there's a constitution and that's not going to happen. But living through the last 3 years, I think that just takes that off the table. 10 years ago, I probably would have agreed with you. But seeing people's businesses being taken for the good of society, and jobs taken away, I can no longer say that, okay, yeah, the government's not going to overstep the constitutional boundaries. They're not going to crush individual rights and property rights. I just don't think that that's a realistic. I think it's a naive perspective, and something that we have to be very cognizant of. But whether or not it's officially entwined with social credit or not, the social credit piece is still scary on its own, and the CBDC piece is still scary on its own in terms of what it represents. In terms of having absolutely no freedom and complete transparency to the government and the Fed for everything you're doing, and allowing them to control what it is that they want to incentivize and what it is that they want to disincentivize, just as they do through policy now.
Yeah, it's a scary future that we have these politicians like the governor of California talking about how they want to ban the sale of gas guzzling cars and cars by 2030. But he doesn't seem to understand that there's not enough copper and not enough other key metals available, cobalt, rare earth metals, nickel, all these other things to go and build the electric cars. And we can't do that fast enough to switch the entire internal combustion engine fleet over to gasoline. Also, we don't have all the charging stations necessary, but yet he still announced that he wants them phased out by 2030, and he's going to tax people who don't comply.
You notice how 2030 keeps popping up. It's that same absolute myopia that we saw during COVID, right? Is that I'm going to crush a virus, which in and of itself is insanity, with no regard to any other potential consequences, whether it's child development and learning, the economy, businesses, people putting food on their table, mental health, all of these other things, is no, must crush virus. And, I think that in many ways, the myopia is intentional, because it gives a cover story for other things and other agendas that happen to be out there.
Oh, I totally agree. Look at all the leeway that Big Pharma got. I mean, Big Pharma got almost a blank check from the government to accelerate things. And then they also got full legal liability protection here in the United States. So you cannot sue them in a class action if you have all these side effects from all the booster shots.
Yeah, no, it was a very eye-opening scenario, and it's looking at that and sort of the analogies to other things that possibly could happen. It just really set up that foundation, and I think because there wasn't the pushback and the way that they structured it, so that there wasn't pushback, it gave the people who are doing these kinds of things the fortitude to feel like I can do this again and get away with it.
And what also worries me, Carol, is that there's 6 major industries and a couple companies in each industry. So there's not free markets, not real competition. The government's protecting these large companies and vice versa. It's like a revolving door of corruption and protection and bribes and scams between like the large Wall Street banks, Big Pharma, the large tech companies, a couple other key, couple other key industries. And they just have way too much control. And there's, you talked about the U.S. Constitution. Seems like there's real selective enforcement here of the laws and when they use the Constitution, when the laws are valid, when they're not. And it's just not fair, and it's making things worse and worse in society.
It is. And I think, one area where we can really see this is in technology, where you have these massive technology companies that are basically de facto governments. In many cases, they have more users than some of the biggest countries in the world. They have, bigger market caps than some of the GDP of, major economies. And, there isn't capitalism, the way that there was perhaps in previous iterations of technology and development. Like if you think about our cell phones, there are two carriers that dominate more than 99% of the global landscape. So not just here in the US, but also worldwide, you have a choice between one of two operating systems. Like that's basically it. There are a couple of small fringe ones, but it just doesn't add up. So that's not capitalism, that's infrastructure. And in the past, when there's been infrastructure, it's been treated as such, and we've had the protections as such. I mean, you may not be old enough, Jason, but I'm old enough to remember when people had actual phones in their homes, ones with cords and dials and buttons and things like that. And the reality back then was that there was legislation that those phone companies, because they have this sort of protected privileged position, they could not refuse service to anyone for any reason. And so if you and I are having this conversation, the phone company wouldn't be like, sorry, I'm going to take both of your phones out because you've been saying bad things about the government, or we don't like what you're saying, or you're an unsavory person, or whatever their reason was. But we don't have that same level of protection that is coming up with the emerging infrastructure companies, whether it be your phone, which is the gateway to basically operating in a modern world, whether it be some of these social platforms, some of the payment platforms, et cetera. And so it really has created several issues, one being that if the people in charge change their minds or they turn over and somebody else comes in charge, it becomes very easy for them to cut people out of society, not because they are truly capitalistic, but they're a protected private entity and they can do what they want. We don't have the digital rights that support us. And then we also have the issue of them basically taking our lives and renting them back to us as a service or a subscription. Because at the end of the day, I do have this cell phone, but all I have is, glass and some plastic and some microchips that are totally useless if that operating system or, any of the other components that I use on it get cut off.
Then you also have the tech companies stealing your data, reselling it without your permission. It's just unfortunately, the more I see like the plans that are being announced, the more I think it's Orwellian, especially with the technology, because this seems the technology that's available now is more Orwellian than George Orwell could have imagined when he wrote 1984.
It's true. And it all kind of ties back and always comes back to that. And I know it sounds cliche, but it really is that type of a world. If we go back to social credit and the Chinese, there's a story in NPR about a gentleman named Lao Duan from China, and he was a coal intermediary. So, he was kind of in that middleman position in terms of coal and storage. And the Chinese government changed their position on coal and basically wiped out his business. And when they wiped out his business, he couldn't pay his debts because the government had shifted policy overnight and didn't make any provisions for people like him. So he got put on the blacklist in China through social credit, and he couldn't travel and he couldn't do all these things. And he's telling NPR that, as he goes into town, he looks up and he sees this giant moving digital billboard, and his face is on the billboard with his name and his unique identifier number. And it says, this is not a trustworthy person. This person is untrustworthy. Wow. And as they cycle through these different pictures of here are the bad people in society, here are the untrustworthy people, he said he recognized a lot of them as other counterparts in this coal industry who had been put in that situation, again, through government decision directly. But just that image of this, poor Chinese guy who's looking up and saying, he's untrustworthy.
They're
This is real.
They're trying to make sure then that he can't go into a restaurant and order food. They're trying to just ruin the poor guy's life.
Everything. And again, so we'll connect that back to social credit and some of the things that happened during COVID. So the way that they're attacking you via the social credit currently is one is your social standing. And so for him, it's the billboard, but for us, it could be cancel culture, the kinds of things that happened to Joe Rogan and Dave Chappelle. And if that had worked, if your social standing is diminished, then you get fewer opportunities to make money, right? One is then your current job. So they want to take away the money that you're currently making. Again, same kind of thing with Joe Rogan, but also people who wouldn't take the vaccine that lost their jobs. So that's a second way. And then the third thing is your direct assets. So in some cases, obviously they shut down, small businesses. Our neighbors to the north in Canada, if you look at the Freedom Convoy, those truckers, they actually froze their assets. They froze their bank accounts because they were, considered not part of, what was socially acceptable. They were in wrongthink.
They stole the donations too, right? Didn't people try to set up donation websites and they shut those down and stole that too?
What was amazing about that is that the GoFundMe that had raised, I think it was about the Canadian dollar equivalent of 10 million Canadian dollars, that GoFundMe is a US company, and the Canadian government came to them and said, shut it down. And they went, oh, okay. So they weren't even just complying with their own government. They were complying with somebody else's government, which is crazy. Then hackers came in and said, well, the Canadian government said this wasn't okay. So we're going to expose all of the people who made donations to this. So not only were the truckers, assets frozen, but if you made a donation, we're going to expose you as part of, these bad people, kind of a one step away from the digital billboard, right? Your face wasn't on it, but you might have been on that list on the website. And then ultimately, it went over to a different website and, ended up, once it got transferred, being frozen again. So yeah, it's a really frightening proposition, which is why it's so important, because this is coming at us from so many different areas. I mean, think about just what we've covered here, Jason, in the short period of time, from the social credit and the CBDCs and the Fed debasement and all of these different policies. And, we haven't even fully gotten into ESG and some of these other topics. You need to understand each one of them and empower yourself so you can come up with a plan, whether this is a short-term or long-term scenario, of how you are going to protect yourself and make sure that you don't end up in a position where you own nothing. Because while that is the intention of the elite, we know that that's not what's going to happen to them. So we want to be mimicking what it is they do and not what it is they say, and protecting ourselves from all these different things that are happening.
Yeah, the elites are buying more assets. They're looking at things that are cheap. They're trying to understand all the loopholes in the taxes. I'm getting really tired of talking about ESG. I call it the energy spending grift, because literally I'm 20 minutes outside of Washington, D.C. I've lived here 20 years. And when DC is pushing things like this, it means they want to rapidly increase government spending a lot more. And then they want to either steal or siphon off even more of that spending for unbidded government contracts. They want to funnel contracts to friends and family members that are on the board of directors of these green energy companies. And then the share prices go up and then the insiders dump the stock. And there's other shenanigans going on. I mean, look at all the insider trades that Congress is getting away with, trading on top secret security clearance inside information, making millions of dollars. No one's going to prison.
Yeah. And the flip side of that, too, is that it's also business social credit. So it's another way to bully companies into compliance with whatever it is that the elites and the political class want to push as an agenda. And one of the most egregious stories that's happened over the last year or so is that Tesla was thrown out of one of the key ESG indices, while some of the fossil fuel companies were put in or left in, because when Elon Musk decided that he wanted to take over Twitter, they didn't like his free speech focus, and they didn't like some of the ways that he acted. So they used business social credit to punish his company as well as all the shareholders of that company.
But did you see his compromise? Looks like the new Twitter CEO is going to be former World Economic Forum, though. So it looks like he caved.
Well, that is a giant concern of mine. And the fact that she is using words like, reimagine or reshape some of the key WEF language. I was very surprised that was in fact his pick. And, I don't know the inside baseball there. So hopefully he keeps a close eye on that, because having somebody who is that connected to the World Economic Forum, at the helm of a big entity that has a whole slew of data on all of us, is very concerning.
So the Fed is still talking. I guess they're going to take a break, maybe a pause. They're not lowering interest rates. The Fed may continue to hike interest rates or keep them high for a while. Interest payments on the national debt are piling up. That's what one of the top 3 or 4 expenses now. It's more than defense spending. Do you see a scenario where the people in power would actually allow like deflation and bankruptcy for a long period of time? Or do you think that they still want the asset prices up to benefit the wealthy?
So at the end of the day, I think in a perfect scenario, the hidden mandate of the Fed, we all know what their stated mandate is supposed stable prices and full employment. Obviously they've done a bang up job of that. But I think that, the not so secret mandate has been to support Wall Street, and the asset prices, as well as enable the government to borrow cheaply and to continue to expand. And so I think that is the kind of position that they need to get back to. And this is one of those things I'm kind of sorting through right now, is like, which path does this take to get there? Because as I said, there's a lot of stuff going on in terms of, the needing to not only refund the Treasury General account, but also the massive deficit we're going to have in the back half of this year. And then, what's going on in the global economy. So
also the U.S. Sorry to interrupt you. Also, the U.S. banking system. I mean, so like basically with Austrian School of Economics, the money supply creation that they've done since 2008, and then in the last 2.5 years, they took the money supply up enormously. To the analogy I'm using, they took the car up to 120, 140 miles an hour, and then they just slammed on the brakes with the interest rate hikes. And now the banking system, with the pace of the interest rate hikes, I mean, I'm hearing from bankers, I've spoken off the record with a few of them at some of the large banks. They basically told me that the banking system in the United States is a mess now.
Yeah, so you and I talked about this offline too. I did a piece for Goldline. I have an economic newsletter with them, and my last one is whether or not we're in for a banking catastrophe. And I think we've looked at some of the same source pieces. A study that came out of a group of academics from Stanford and Northwestern, and some of them are tied to the NBER, as well as the recent FDIC report. And some analysis that was done by Wall Street on Parade that looked at it. And basically, one of the 4 largest U.S. banks, one that has more than $1 trillion in assets, has that unfortunate position of very high uninsured deposits, as well as very high concentration of mark-to-market assets that are way below, the value that they're being carried at on the bank's books. So I don't, given the level of what's happened here, and just looking back at like a history rhyme from the Great Recession financial crisis and how long that took to unwind, I don't think we're out of the woods on that yet either. So you look at all of these different scenarios.
Well, commercial real estate just started. I mean, we're seeing every day there's really bad headlines, but we haven't seen the banks say that like we have just large losses. So I think this is just we're both baseball fans. I think this is the first inning of the commercial real estate crisis.
Yeah, so we've got commercial real estate crisis. We haven't talked about CLOs, which is pools of risky corporate loans that could cause an issue, and derivatives. There's a lot out there. So I think we could be at a position, and we're already seeing this, between monetary and fiscal policy, where you see policy that is at odds with each other, something where like you see interest rates, they're raising interest rates, but they're doing QE at the same time.
Oh my God.
Just insanity. Because there are so many issues here, and unless they're going to allow for just a complete chaotic period here, and then have to say, hey, we caused this. I think there's going to be weird things that are continuing to happen. But at the end of the day, the level, the scope, the duration of this historic interference in the market from monetary policy in particular, but also fiscal policy, like it was always going to have issues. The idea that they were just going to be able to do this and get away with it is ridiculous. And I think given the scope of what they've done, it just seems like there's more fallout to be had. So keep their eyes on that as well.
Well, they basically got away with it for a decade from 2009 to 2019. I mean, I was having people tell me there is no inflation. The Fed was saying inflation is
because it went to the assets, because it benefited everybody. It benefited all the people who were doing the talking. They loved that. They loved the inflation because they were the ones that were benefiting at the expense of Main Street.
And we're both capitalists. So I know there's people saying that the Federal Reserve Bank and central banks are pro-capitalism. I would totally disagree because they're enabling the government to keep spending, and the government wants to raise taxes. So the government is very inefficient with capital use and lots of corruption. So there's waste, fraud, corruption, and abuse. I live right outside of DC. I don't want to go into all the stories, but it's crazy how much spending is wasted here. And so I think ultimately, if the Fed keeps rates at these levels and DC keeps spending, the average person on Main Street, so a small business owner, the entrepreneurship, someone who wants to grow their business, who actually has a good business idea, and maybe they were making some good money in this environment, I mean, they're going to get screwed more and more.
Yeah, no, it's challenging. And obviously, if we go back to asset ownership, that is a way to make money. So you need to look at the different ways that you have yourself invested in the different types of hard assets that you're invested in. And I do think you need that diversification to protect yourself because we don't know duration and we don't know the paths. And there are just too many things coming at us. And in regard to your Fed comment, the Fed is central planning, and central planning and capitalism are always on the opposite sides of the spectrum. So whoever's saying that, smack them around.
And there's also a quote from Lenin out there saying that once we get a central bank, we're 90% of the way to socialism.
Well, I think there's a good reason for that. And I think that's why so many people back in the day were opposed to its creation. And certainly, we've seen it morph into something that was sort of beyond everybody's expectation. And it's truly ugly as somebody who spent, as I said, more than 25 years connected to markets to see the way that it's shifted. When I was a financial analyst back in the mid 90s, like the Federal Reserve, we never talked about the Federal Reserve, nobody cared. Now, that dominates the headlines, whatever they do, everybody's hanging on it because that's what's moving the markets. It's not the innovation. It's not the fundamentals of the company. It's how much are we propping up the stock market and interfering and transferring that wealth from the average person to the wealthy and well-connected. It's really disgusting to watch.
Yeah, I agree. It's all about liquidity injections. The Fed either adding liquidity with some type of bailout program or other liquidity program, or removing liquidity with balance sheet reduction. Really, Carol, I would say that the rules changed a lot since 2008. In my opinion, based on the stuff I've learned about what actually happened with the bank bailouts and the one-time partial audit that Ron Paul got from the Federal Reserve Bank back in 2007, I came to the conclusion that the system actually totally collapsed in 2008, and the Fed's just done a bunch of crazy stuff just to keep the pretense going, especially inflating asset prices. But they were able to get most of the monetary inflation and the balance sheet expansion and the cheap credit into asset prices for about 10 years. But then the real economy just suffered from 2020 to 2022 with bad stagflation. Now taxes are going up.
Yeah, it's not the best scenario. And I know we've got to probably wrap things up here soon. So to try to leave some optimism, because boy, Jason, the two of us together are super depressing. To try to leave some optimism here, I'll leave you guys an Easter egg because you seem like an Easter egg kind of crowd. So in You Own Nothing, I made chapter 11, as you know, is usually a bad thing, right? It's a bankruptcy. It's a removing assets from you. And so my chapter 11, I turned it on its head, and that is the own everything chapter. And so it really is about how you can start to change your behaviors, including your financial behaviors, to try to put yourself in a position to own as much as possible. And while I don't know that we can change the realities of history and the trajectory we're on, I do think that we can delay it. And so hopefully the more people who understand this and empower themselves with knowledge and share this knowledge with other people, the more voices that we'll have to push back and maybe actually get some changes and reform. But at a minimum, if we don't, then at least preparing yourself for what's ahead and doing everything you can to get through periods of chaos that are likely to continue and accelerate in the future and set yourself up for the best situation possible, I think is critical, because, the next 50 years are not going to look like the last 50 years. And you need to understand that, come to terms with it, and come up with your battle plan.
I agree. And we need some optimism here, because unfortunately, if people look at the data, wages, like I said at the beginning of the interview and discussion, the wages have not kept pace with the real inflation rate and productivity gains since the 1970s. They've been stagnant. Yeah, we're seeing wages go up a little bit, but they're not with the real inflation rate. And the other major thing is, with all these Fed and government policies, they've created the largest amount of wealth disparity since the 1920s. So if people are going to need to think out of the box to reverse this, because I don't think it's sustainable. The average person is just seeing that I'm working so hard and my standard of living is declining. People are gambling on all kinds of crazy stocks and altcoins. And for maybe a short amount of time, they go up, but then they crash and then things ends up worse, or they get a large tax bill.
Yeah, and I think that really understanding that piece that the monetary and fiscal policy has played in driving that inequality, because people, I keep saying, oh, we need to tax the rich more. And it's like, that's not your problem. And you need to really understand that. You've identified the issue. You need to understand the ailment and not like chop off your hand because you've got a blister on there.
Well, Carol, I feel like we're already taxed too much, especially so you have the direct taxation and then you have the self-inflation tax. I feel like we're already taxed too much.
We definitely are, and it would certainly be to everyone's benefit to have a much smaller government and much more, flexibility in the hands of people to put that to productive use. That's what we should be doing, because at the end of the day, what people do forget here is that this money, when they go and they quote unquote print this out of nowhere at the Fed, their money is just a proxy for your productivity. And so if you're not adding more productivity and you're just printing these dollars, all they're doing is debasing each one of those dollars. So we need to be much more focused on the real issues and the real drivers of growth and opportunity for everybody, and not let these central planners game the system.
I agree. They're just redistributing wealth and redistributing people's purchasing power. So the harder you work, your standard of living is declining because of currency debasement and taxes.
Exactly. And by the way, as I talk about in the book, also you want to make the analogy to Rome, because that really is sort of one of the things that people don't realize is that the debasement of the currency was a key driver to bringing down Rome. And we're very much in a very similar situation, that the most likely culprit of bringing down the U.S., that call is coming from inside the house.
Yeah, I totally agree. And there's a lot of similarities between what's happening in the U.S., especially here in the Washington, D.C. metro area, and the end of the Roman Empire, unfortunately.
And Nero is fiddling while it's burning. So let's get rid of Nero and put out the fire.
So, Carol, I really enjoyed our conversation today. If my listeners want to pre-order your new book, You Will Own Nothing, how do they do so?
So it is, I'm very fortunate HarperCollins is the publisher, so it is widely available anywhere. Please, again, let's take the first behavioral step towards owning something and buy a hard copy, because when they go to change this in the future online, then you'll actually go, no, that's not what she said. This is in here. But if you like to shop with the big guys, you can go to Amazon. If you want to support small business, you can go to bookshop.org or one of your local small business booksellers, wherever you get it. But I really hope that people will take this opportunity to empower yourself. There's so much knowledge in here that's really critical, and you want to know it, you want to share it with other people, and you want to create that battle plan to fight back, because the elite may want you to own nothing, but I want you to own everything.
And I highly endorse Carol's other two books, especially The Entrepreneurship Equation. I guess asked all the time about book recommendations for entrepreneurship. Definitely go and buy that book if you haven't done so too. And War on Small Business was also very good. I mean, there's a war on my small business. There's the much higher self-employment tax. I'm not even taxing my profits now. I have to prepay $2,000 a quarter now on my revenues.
Yeah, it's really hard being a small business owner in this country. And, as Charlie Munger says, you show me the incentive, I'll show you the outcome. If we wanted more people to start businesses, if we wanted more people to own homes, the biggest driver of wealth, the government would be making it easier to do those things. The fact that they're not tells you all you need to know.